Hi, I'm Toby,
And I'm Nick.
and welcome to the Pure Property Podcast from Track Capital, where we talk about all things property and property investment. The aim of the podcast is to give you bite-sized chunks of our industry insights and knowledge to help you invest intelligently. So, Nick, we have been quite busy this week with a new launch. Why don't you sort of kick off and introduce what we have been doing this week?
Absolutely, yeah. So obviously last week or the past couple of weeks was a lot of hype and speculation around the market data and the taxes, regulation, things like that. So this week's been a bit more calm and it's given us the opportunity to take a new product to market. So we've just launched a new development in Liverpool called St Anne's Gardens, really attractively priced from £206 per square foot. Low deposit levels, large spacious units, and 12 minutes walk from Liverpool city centre. So, yeah, we've been running due diligence on that and putting all the marketing material together over the past few days. So, yeah, really excited with the launch on that. Secured some early sales, so that's some positive stuff. So, feel free to go and have a look online at that.
Yes, it does look like a popular one, and we're already getting, as you mentioned, some interest in it. So, yeah, that's a great site, and we do recommend taking a look at it, especially if you're interested in Liverpool. But more importantly, what we are talking about today. So, the subject we're going to be covering is how do you go about choosing a property investment company? So, Nick, why don't you introduce and give an outline of what property companies such as ourselves, what they do?
Sure. So, property investment companies are effectively there to help investors select, choose, and run due diligence on properties that they may have available for sale, and then to guide the investor through the process from start to finish. Hopefully, holding their hand and helping and ensure the investor is aware of everything. They're fully informed. They're up to date with what's happening, and so they can go on to a successful purchase.
Yeah, the investor themselves may lack the time, knowledge, and or expertise to do it themselves, and hence them then looking for a property investment company to assist them. They also source the suitable properties utilizing their network. So they will either have developments which they may be developing themselves, or in quite a normal scenario, they'll have access to other developments via different channels and utilizing their network.
Yeah, exactly. So for us, for example, we have access to plenty of developers or opportunities that you might not be able to find online. So as well as helping investors ultimately choose the property, an investment firm should be there to guide the investors with introductions or general assistance with the conveyancing and purchasing process, i.e. the legal side of things. Mortgage brokers they can help with setting up limited companies and the management side of the structure, and then the back end letting and management of the property as well.
Yeah, exactly. And what you'll tend to find is that the property investment companies they'll have sort of their stock on their books, or a list of properties that you can choose from, or you can sometimes speak to them, let them know your criteria, and they can go out and source properties based on your requirements. So there are two ways they operate, and each company will operate in a different manner.
Yeah, and when you're speaking to different agencies, obviously some of them might focus on different locations. Some of them might be covering or have a portfolio which is national. Others might do some overseas stuff as well, like a few UK agents work in places like Dubai, etc. They might work on different asset classes. So some might be focused on residential, where others might be more student, hotels, care homes, investment bonds, etc. And obviously varying price points. You might get some that work purely on the luxury end of the market and some which have a more sort of diverse range of properties. But at the end of the day, it is important for investors to know and understand that when you're purchasing through an investment company similar to ours, your legal contracts are ultimately always with the vendor and the developer. So you've got the security of knowing you are contracting with that party directly. The investment comes in as more of a service to sort of match opportunities with your criteria and help make sure you achieve your long-term objectives, although there isn't in most cases typically a legal agreement involved with the investment company themselves.
Yeah, good point. And I think it would be good to outline who should be looking to use a property investment company, as it won't be for everybody, but it is definitely suited and it's definitely worth using for certain types of investors. And I think, firstly, one of the main things that we notice with our investors or our clients is they will tend to be sort of time poor. They'll be very busy people. They don't have the time to go out to find the properties, as that is very time consuming. They don't have the time to do the initial full due diligence. There's a lot involved in that initial period in just highlighting certain property investments, let alone then narrowing it down to one that you would like to go forward with. So some don't have the time, or they just don't want to. So that's why they then look to an investment company to handle that side of things as well, because people's time is valuable, and they would, in most cases, prefer to spend it doing something they enjoy a bit more rather than what we do and searching for properties and running numbers and looking at different locations, etc., which us strange people find very exciting and enjoy doing.
Exciting, that's a strong word. But yeah, the other one is looking at sort of the knowledge and the experience side of it as well. Although some people may not want to sort of input at the time, others do, and they're happy to take advice, information, suggestions, and general advisory from investment firms. So yeah, other people that may want to look for an investment firm would be people that are looking for that extra knowledge and experience. Now, depending on the broker you speak to, I know personally how companies in our industry hire. So that sometimes they do focus more on young, outgoing, confident characters who are happy to speak to, investors and high net worth individuals on the phone. But at the end of the day, you've got to make sure you are working with a broker who has the right knowledge and experience. Do they have a property portfolio themselves? Have they worked in the industry for different companies? And do they truly understand the process from start to finish? So, yeah, if you've got someone that can share that knowledge and experience with you, there's definitely a lot of our investors who appreciate that, and that's why they would come to us or a similar company.
Yeah, definitely. And I think on that point as well, to follow on from that, the person who's going to be utilizing an investment company, they have to be happy that it is going to be hands off. So they have to accept the fact that somebody else is going to be doing it all for them. So they have to have that element of trust, and they have to have confidence in what the people or the investment company are presenting to them by the way of property investments. So happy to be hands off and let someone else do it for them. So again, that comes down to trust and trust in what's being presented to them as well.
Yeah, and then just following on from that, obviously, when you are reviewing potential deals or investment structures from investment agencies, you've got to make sure that you are ultimately doing your own research and your own checks yourself. You shouldn't invest without doing any sorts of due diligence on your side. So, whilst it's nice to be hands off and to utilize the knowledge of the investment firm, etc., you've got to make sure you've got the capability to ultimately assess the basic information that's there as well.
Yeah, exactly. And also, in terms of who should be using a property investment company, it has to be somebody who wants good quality new build off plan developments, as the majority, they're not available to purchase directly from the developer or online. They're not on the market, as some would say. So they have to be looking for that type of property. The investment companies which we're talking about at the moment, they're probably not going to be dealing with a lot of secondhand stock that you can just walk into an estate agency firm and get hold of. So that's definitely something to bear in mind. And if they were, it's unlikely that you would sort of know who that product is coming from specifically.
Yeah, I mean, what we typically see is in the likes of London, big public developers, your Barclays, Taylor Wimpey's, etc. It is easy to buy direct from, and then there's a couple in Manchester as well, some of the larger ones. But other than that, yes, it's quite often the case that most investors wouldn't have access to or know the developers that are actually building a lot of the schemes. So yeah, it could definitely be worthwhile for those that are looking for that quality, city centre new build investment stock. Cool. So moving on then, a couple of the bits that we need to consider when we're choosing an investment firm to work with. A couple of points we've listed off here, which will hopefully be some guidance. So the first one being the products and actual investments that they offer. Is this ultimately what you're looking for? Is this in line with your strategy and your objectives? There's a number of specific questions you can ask and use to identify if they are suitable. But yes, you want to make sure, in general, the investment firm has a wide selection of properties that match your criteria.
Yes, and then you also need to consider, are they charging a fee? Because although we don't, there are some investment companies out there that will charge a fee for their service. And if they do, are you happy and comfortable with that fee? And is it warranted? Are they actually offering you a service that warrants the fee that they're charging? Because if they're charging you £10,000 just to offer you some basic plain advice on a property which they can just find anywhere, that's probably not warranted. But if they're getting you maybe an exclusive, completely off market, nobody else has access to product or slash investment, and at a discounted price, and they're charging you a few £1,000s for that, as long as it stacks up within the deal, then that's obviously something that even me personally myself, I would be happy to pay. So again, yeah, do they charge a fee is definitely something that you need to consider when choosing one to work with, and always ask that question when you are first talking with a company. Is ask them, are you charging or do you charge a fee for your service?
Exactly, yeah. And as you said, I wouldn't be put off if they do, even though firms similar to ourselves, most of them don't charge, but there are a handful that do. But as you sort of pointed out, it's all about if it's justified or not. Cool. So moving on to the next point, then again, looking more on the product side is the specific property that they are actively trying to advise you purchase suitable for yourself? I.e., does it fit your criteria? Is it in line with your strategy and your long term objectives? Now, working obviously at director level in an agency, we understand what our competitors are selling, how those developments come around, i.e., what's the relationship between the agent and the developer. There are cases where investment agents will take stock directly from a developer. There'll be what's called a master agent on a scheme. And as a result of that, what you'll find is that they're commercially incentivized to focus on that scheme. It's where their commission is, it's where their safe deals are. So, not all the time, but sometimes that can reflect when the members of staff are speaking to investors directly, i.e., they're going to recommend whatever you tell them, they're going to recommend that particular product because they've been told to sell that by their sales managers or by the directors, etc. So, yeah, just bear that in mind. Yes, it might be the case that it genuinely is suited to your requirements, but also there is some form of bias in some cases that does happen as well.
Yeah, and a quick way to figure that out is ask the question, okay, thank you for obviously showing me this option, but what else do you have available that may work for me? And if they say, oh no, don't worry about anything else, we've just got this option, you can kind of maybe get the feeling that they're just trying to push a specific product, because that's what they're told to, or that's what they're incentivized to do. So just something to bear in mind. And again, sort of following on from that, do they pressure you to buy? Are they constantly phoning you multiple times a day? Are they telling you that if you don't take this right now, it's going to go and you're going to miss out on the biggest opportunity of your lifetime? Are they sort of using scarcity tactics there? Which, look, in some cases that can be genuine, because if there is a very good deal, it will get snapped up. So in some circumstances, they could be telling the truth. But if on the first conversation you've had and you've only spoke to this individual a couple of times, and they're sort of pressuring you, calling you loads, telling you every deal that they've got is the best deal since sliced bread, then we would class that as sort of pressurizing sort of sales
Mm,
tactics.
mm.
And again, if you're not comfortable with that, and if you're not able to handle that, then it's, yeah, just something to bear in mind. You may not like that style, because at the end of the day, you have to remember that some of these companies, they are employing salespeople, so they will be sales focused, and that's nothing against them. That's their job. That's what they're there to do. But just be aware. You need to think about, does this company sort of pressurize me? is the language they're using and the pitches they're using all the time feeling very pressurized? And if they are, you may not be comfortable with that. And if you can't see through it and you're not able to deal with it, then it may be a company that you may want to sort of stay away from and maybe not deal with.
Yeah, I mean, you mentioned it there. Things like the hottest thing since sliced bread, or these are selling like hotcakes, or any kind of red flag phrases like that. So, what we do see sometimes, and that may start ringing alarm bells. So, yeah, keep it in mind.
Yeah, exactly. And I think what a conversation that I have quite often with investors, maybe when they're sort of relaying to me similar conversations they've had with other companies or other individuals, I will just say, look, yes, it may be a very good deal, but if you're not in a position at that point where you're 100% happy to commit, that don't do it, because you have to be fully 100% committed, know what you're getting yourself in for, know the product inside out, and be happy, because otherwise you will resent that and that will eat away at you. You're putting down a reservation fee, you're going to be going on and putting down a chunky bit of money to exchange contracts and fully commit to this purchase. It's not something you want to take lightly. It's not a pair of shoes where you can keep the receipt and after a few days go back into the shop and change them over. So you have to make sure that you're happy, because look, if it is a genuine opportunity and you weren't ready for it at that point and you miss it, there will be another opportunity at some point that will come along. So don't feel like you'll never get another good property investment opportunity again.
Yeah, and I suppose it's similar in terms of being related. When you're assessing the properties that they do have, are they actually genuinely good investments? So, do the financials on the back end stack up? Does the do the legal contracts look all correct? Is the deposit protection in place sufficient? And all these bits and bobs. So yeah, if although someone is pressurizing you, you have to make sure that you've taken the time to read through and make sure that the investment itself is of a high caliber.
Exactly. And are you then comfortable with their advice and knowledge and the expertise that they are offering you? Because again, if you are coming across a lot of their investments and they're not sort of stacking up, and they're not sort of genuine quality investment opportunities, that may lead you to think, well, actually, I'm not really comfortable with the advice. And also, when you are speaking to them, are they confident and able to demonstrate to you sort of real, genuine facts and figures and knowledge of what you're looking for? Because it's all good presenting you with an opportunity, but are they able to let you know why that's good for yourself based on the criteria you've given them? And again, this will be dependent on you as a person. Not every investment company will work for everybody, because different investment companies operate differently and offer different investment opportunities, and sort of how they are able to present those to you as well. So you might not need the most knowledgeable investment consultant, for example, if you have a lot of experience yourself. You may be a sort of well-seasoned property investor, and really all you need is a company that is able to just present you with opportunities, and then you can go off and do your own due diligence. You may not even have to speak to them that often. It may be a case of, thanks, I've got the email, I've got the information of everything I need, I'll let you know if it is of interest. We do have some of those ourselves. They'll be well-seasoned investors. We'll send them a lot of opportunities. We'll send them all the due diligence, and we'll only hear from them if it's something that works for them, because they know exactly how to dissect an opportunity and an investment and look at everything. On the other side, you may need an investment consultant that is able to talk you through everything. And I know it sounds a bit childish, but hold your hand through everything as well. Really break down the numbers, the location, the investment case itself, and really elaborate on how that is going to work for you and your strategy. But again, different people offer different ways of operating. I mean, does the consultant have their own property or experience in property investments or the industry itself? Myself, I own property investments, so I am able to offer a certain bit of advice from a first person point of view. But again, different people require different levels of service.
Excellent, excellent. So cool. So yeah, I mean, to summarize that, ultimately what we're saying is, are you comfortable with the advice, the knowledge, and the expertise that the potential investment consultant is giving to you? If you're not, if you're asking questions and it's not quite detailed enough for yourself, don't hesitate to look elsewhere or continue doing your research. And as part of that research, maybe checking out online reviews. So we want to be checking, Trustpilot, Google reviews, etc. I'm sure everyone's well aware of this by now, but yeah, we do want to take it with a bit pinch of salt sometimes. If they're very vague, short reviews and they are all 5 stars for the past 10 years, then obviously alarm bells will be ringing. But also at the same time, you might have the odd, unsatisfied customer that's just left something which is, been 1 in 100 transactions or something. So yeah, just bear that in mind. But having a quick scan of the online reviews is always helpful, I find.
Yeah, of course. And I think even if you do see bad or even good reviews, it is something that you can bring up with the company. There may be a scenario which was actually out of their control, maybe external influences. They may have a bad review, and when you ask them about that specific review, they may be able to come back to you with a perfectly acceptable reason why they had that review. It may be, look, we had a product, etc., etc. The developer went bust. Something happened out of our control, and that's why they were frustrated. And we tried to rectify it here. We did this and this, and because as we always say, there's always risks involved with property investing, and a lot of the risk is out of our control, especially and as an investor's control. So yeah, you can always ask the question. Same with good reviews. Ask them the question about a specific good review, and sort of really narrow that down if that's something that you are hot on. But yeah, good points there, Nick. And that probably leads on kind of maybe with this next point is industry regulations. What industry regulators are they part of? What redress scheme? The HMRC, the ICO, you have to make sure that they have all these in place. If they don't, that is definitely a red flag. And always you can check online as well in quite a lot of the scenarios with the regulators if they are part of them as well. I do know in the past, and not necessarily property investment companies, but they were posing as property investment companies and property sources. They would say that they're part of a redress scheme. And when you actually looked it up, they weren't. So again, something just to bear in mind.
Yeah, absolutely. And I think it's something we're going to see more of in the future as well, as the market does become regulated eventually. I think there's rumours of it happening over the next 2 to 3 years of them bringing in a standard industry qualification, which most customer facing staff, i.e., investor facing staff, will have to take and be qualified in. So yeah, keep an eye on that space. Moving on to the next one, then the third party companies that they may be introducing. We mentioned earlier that investment agencies can potentially help with mortgage brokers, management companies, lettings firms, company setup and management, a currency exchange, etc., etc. If they are introducing you to these companies, don't just take their word from it on their performance as well. You want to conduct the same level of due diligence on those guys as well. So check their reviews, speak to the team directly, see what their online profile is like, their website, the level of detail they provide, and just make sure you're double checking that they're safe to deal with as well.
Yeah, and another point to consider would be their track record. Maybe looking at some previous developments that they've told you they're marketing, and it may even be speaking to maybe an investor or a recommendation that has been made. Yeah, there's ways that you can look at track record and always ask them, bring them up, see what they've dealt with before, and see what their experience is in that side of things as well.
Excellent, cool. So just to wrap things up, then I think we've waffled on enough about the intricacies of choosing and analysing an investment company. But as you would have probably noticed, the main gist of it is: yes, you want to take their advice. Make sure you're dealing with a reputable firm and it's someone that you can trust and pick the phone up to when you need to. But at the end of the day, it is your responsibility to make sure you're investing sensibly. And you would be surprised that the amount of trust that some people do put into companies or how quickly they'll make a decision. So, whilst yourself, you may be quite risk averse and you might do a bit more checking, I can assure you that doesn't go for every potential investor out there. So, make sure you're not sort of giving over all the responsibility and making sure you're doing your checks. We do know what our competitors sell. We know the merits of some investments. A lot of them do have pros and cons. Some of the cons which they may not communicate as transparently as others may. So yeah, just make sure you're doing your checks, you're going for the right properties that suit your strategy in the long term. You're not being rushed into it. And ultimately, the investment firm's job is to put the investment case together, to present that to you, and then for you to make your own informed decision, for you to go online, validate what they've told you, and just make sure you're doing all your checks. So, yeah, that's the gist of it, but hopefully that helps. Any sort of final words to add there, Toby?
No, I think that's perfect. I think you did hit the nail on the head. And so, as you said, yes, the investment company's job is to present you with the opportunity, but ultimately, it's your responsibility to look through it, validate it, and make sure you're happy with it going forward. So, great way to wrap that up, Nick. Thank you for that. And next week's episode, we're going to be breaking down and going over the top 10 investment jargon terms and explaining what they mean. You may have come across some and thought, what the hell is that supposed to mean? So I'm sure there may be a couple of those, or you may know them all anyway. But that's what we're going to do next week: is top 10 investment jargon terms explained.
Yep, that should be a good one. I think sometimes we forget, or I know I certainly do when I'm contacting investors, is with the the jargon or the terms that we're actually using, and not everyone's always familiar with them. So yeah, we'll do a bit of a an analysis of the terms used, and hopefully make everyone a bit more knowledgeable.
Thanks for tuning in this week. We will see you next time. Bye bye.
Thanks, everyone. Bye bye.